Are Cathie Wood's sanguine opinions regarding Tesla warranted? Are you of the same mind as she is on Tesla? She's always had a good attitude towards Tesla, but what are your current thoughts? In this video, we'll examine the projects that Tesla is presently working on and hear from investors like Cathie Wood about them. We'll also present you some earnings projections to help you decide which financial endeavors to pursue in the future. So let's dive straight into this video. Don't forget to subscribe to Tesla Stock News and hit like. First, though, ARK Invest boldly claims in a recent article about the electric vehicle that the Cybertruck might become as popular as the Tesla Model Y. This incredible discovery has sparked excitement. Let's take a closer look at this intriguing topic. It appears that forecasters, experts, and automakers were mistaken about the Cybertruck's potential, as well as the belief that electric vehicles, EVs, would only be marketed to a limited number of consumers. ARK Invest challenges these low expectations and highlights a blind hole in the business. Many automakers now utilize the money they get from selling gas-powered trucks to fund the development and promotion of electric vehicles, which are not profitable. If the Cybertruck were to undermine this vital component of their business, it would be disastrous for the established manufacturers. This is not merely a possibility, it is a given. Some automakers, such as General Motors, are reviving despite being a bit late because they are now acting appropriately. ARK Invest looks into past statistics to demonstrate how the U.S. Energy Information Administration (EIA) predicted in 2014 that the country's market share for long-range electric vehicles would be negligible to non-existent by 2040. It is noteworthy that less than a year ago, the United States' share of the EV market exceeded 5%. It would seem that the EIA had to have revised its projections significantly, presumably assuming a minimum of 50% of the market. Still, this would be considered bearish. Remarkably, several states and regions worldwide plan to prohibit the sale of gas-powered cars by 2030, 2035, and 2040. These factors would undoubtedly be considered while making projections. ARK Invest has expressed open doubts about the EIA forecast, even going so far as to speculate that the intelligence behind these projections has become less reliable. They question the EIA's ability to forecast the trajectory of the electric vehicle market. ARK Invest highlights the aspirational goals of renowned automakers like General Motors and Ford as evidence that the transformation towards electric vehicles is well on its way. They emphasize how these well-known automakers are investing heavily in electric vehicles, pointing to a step towards a more sustainable future. Actions like these by well-known industry leaders cast doubt on the notion that EV adoption is only a fringe trend. By highlighting the progressive strategies of companies like Ford and GM, ARK Invest aims to discredit the EIA's forecast by hinting that their assessments fall short of completely realizing the potential and accelerating the growth of the electric car sector. This analysis supports ARK Invest's prediction that EV adoption will be widespread and that the future of transportation will see an increase in electric vehicles. Ford expects 40 to 50% of its global car volume to be electrified by 2030, while GM plans to switch to all electric vehicles by 2035. But ARK Invest challenges the EIA's data, especially in view of the fact that several U.S. states, California alone, making up around 13% of the market, have plans to ban the sale of gas-powered automobiles after 2035. It becomes evident how erroneous the EIA's estimates are. Despite my apparent annoyance, I'm pleased with these projections since they present us investors with a fantastic opportunity. Fund managers and ordinary investors are also ignorant of the situation, therefore the government is not the only organization taking the slow adoption rate into consideration. I have to acknowledge that not everyone can be as ignorant as the government agency is, even though I don't think the rate of EV adoption will be as slow as they anticipate. Analyzing historical trends reveals that they did not seem to understand exponential increase. Furthermore, the EIA predicts that by 2050 trucks would account for 69% of all vehicles in the United States, despite the fact that electric trucks are only predicted to have a market share of less than 10%. ARK Invest disagrees with this prognosis, though. Additionally, they say that 1.5 million reservations have already been placed for the Cybertruck, which suggests that electric trucks might become popular sooner rather than later. According to data from Google Trends, the Cybertruck's popularity might surpass that of the Tesla Model Y. I understand that this may not be the most reliable way to get accurate forecasts, but please bear with me. More people looked for the Cybertruck on Google than the Model Y just after Elon Musk tweeted about viewing the Cybertruck production line on April 2nd, 2023. Remarkably, truck enthusiast forums accounted for the majority of searches for the Cybertruck, suggesting that there might be interest in purchasing one. The intensity of the red color on the map indicates the concentration of searches in these specific areas. Ultimately, the Cybertruck's cost will have a big impact on its viability. If the model is too expensive, sales might not be so great, but if Tesla can produce a more affordable model, sales might soar. Investment firm ARK Invest maintains its emphasis that sell-side analysts should not ignore the potential ramifications of the Cybertruck's success for conventional manufacturers, even though they would find it uncomfortable to predict that the electric vehicle industry would grow at an exponential rate. ARK Invest predicts that by 2027, the adoption rate of EVs might be 70% worldwide. Although this amount seems lofty, it's not insurmountably high. Experts are arguing on Twitter about the quality of the Tesla Cybertruck in reaction to a photo that has been circulating. Although the Cybertruck is still merely a prototype, it's vital to keep in mind that Tesla has produced high-quality products in the past, especially considering that the Model Y is presently the best-selling vehicle this year. Any initial concerns about quality may most likely be addressed and resolved. Recently, Cathie Wood discussed Tesla's focus on AI on Bloomberg. She mentioned the alleged autonomous taxi network that Tesla is creating. Regarding proprietary data and actual driving miles, Tesla has a significant advantage over other auto and companies. This is prior to accounting for the uncharted territory of the Chinese market. Wood says there's a lot of potential in the self-driving cab sector. In the US, a company that can move passengers from point A to point B swiftly and safely is expected to hold a significant market share. Wood claims that Tesla will be that company, and by 2030, it has the ability to generate global revenue in the trillions. Because of this, Wood and her colleagues are particularly excited about Tesla's advancements in artificial intelligence AI and the company's increasing manufacturing efficiency in both factories and cars. While some may find Cathie's enthusiasm for Tesla stock excessive, a deeper look at her background reveals an amazing success rate, particularly with Tesla. I wholeheartedly agree with Cathie's viewpoints, particularly the one in which she highlights the significance of fully autonomous driving technology for Tesla's future. Given her exceptional performance in the Tesla stock market thus far, Cathie deserves praise. Notably, Cathie made the right decision by choosing to hang on to her Tesla stock when its value increased above the 10% allocation cap. She has demonstrated that holding onto these trades yields amazing profits. If she had sold Tesla stock every time it increased above 10% over the last 5 years, her performance would have been substantially worse, around negative 10%, even if she is unable to increase her holdings when the price exceeds this level. Our relationship with China has been particularly fascinating during the COVID-19 pandemic. We initially made large investments because we believed China's monetary and fiscal policies held promise. Since November 2020, though, a lot has changed. We made the decision to significantly reduce our exposure in China due to the strict regulations and guidelines that management teams had to follow. A new definition of shared prosperity suggests fewer services that are exclusive to Tier 1 and Tier 2 cities, as well as reduced profit margins. We have decreased our exposure to JD Logistics and JD, even if we are still slightly involved in these areas, till China once again welcomes international investment. Despite my deep admiration for Tesla stock, my only concern is its exposure to the volatile US-China relationship. However, I believe that most of this anxiety is transient in nature. China's significance will gradually decline over time as a result of Tesla's intention to diversify its business and construct gigafactories across several countries. Even in the worst-case scenario, Chinese companies may have difficulty breaking into Western markets, while Tesla may struggle to sell to the Chinese market.